Hi, James.
Hello.
Hello. Can you please allow me to share my
Okay. Done.
studies?
Done. You can try.
Okay. Thank you. Okay. Good evening.
Good evening.
How are you?
I'm fine, thank you.
Yeah, good. I would like to start by introducing myself. My name is Koshen Butzi. I'm a risk professional, and I hold a master's degree in risk management, and I'm currently working as a risk consultant. So I'm going to take you through the
Yes, I followed your classes the first semester.
Sorry?
I follow your classes the first semester, but I was
okay.
silent one.
Oh, okay, great. So today we are going to discuss auditing for risk assignment, the case study assignment for postgraduate diploma in risk management. So I assume that you did go through the case study and also the questions. So I will not go through those case study details. So I'll go straight to the questions. So the question one is, using examples, discuss the different documents used in the manual purchasing and acquisition cycle. So in this question, we are going to focus on three main things. Our introduction, where we are going to discuss what is the acquisition and payment cycle. The second part will be the business functions in the cycle, and the main part, the third part, which is mainly going to attend to the requirements of the question. We are going to discuss the manual documents which are involved in the acquisition and payment cycle. So as an auditor, in terms of auditing for risk, you will need to understand the business processes within the functions, so that you'll be able to identify and highlight areas where there are risks. So we are going to discuss the cycle, the acquisition and payment cycle. This is a cycle, also referred to as the purchase, payables, and payments cycle, which consists mainly of two classes of transactions. The first class is the acquisition class, which mainly involve the acquisition of different assets. May it be the stock, the furniture and equipment, whatever the company or the organization needs to buy from from other companies for the use, maybe as raw materials or on a for the day-to-day use, or maybe as a property, plant, or equipment. So this class, in this class, the typical journal entry for this class is the transaction is a debit to the inventory or the expense, and a credit to the accounts payable journal. The classification assertion is highly important in the scenario because there are many possible debits that can fulfill the journal entry. So it is very important to first classify the type of the transaction. And the second class of transaction is the in the acquisition and payment cycle is the cash disbursement class. The typical journal entry for this class is simply the debit. You debit your accounts payable and credit the cash. All in all, this cycle is mainly about incurring payable and paying off those payables in cash. The payment can be made in cash or using a check or electronic transfers or any other form of payment. This process generally starts in the purchase with the purchase requisition. That is an employee of the company generates. The purchase requisition is a document that describes the product needed and the quantity required. The document is then sent to the purchasing department that will generate a purchase order from that purchase requisition. And the purchase order will list the products to purchase, the quantity to order, and the price the company is willing to pay. Under normal circumstances, the company's buyers are usually permitted to buy from an approved vendor list. That is, the company should have a list of suppliers that the buyers are allowed to buy from. In the absence of this vendor list, the buyer will be required to provide at least 3 different quotations from different vendors, and they will choose from those vendors. So once the goods are ordered and they have been received by the receiving department, the company will then issue a receiving report. The report should reconcile with the purchase order, and it is sent to the accounts payable team in the accounting department. So in the accounting department, the employees in the accounting department will reconcile the received goods with the vendor invoice, and the journal entry to the accounts payable is recorded. Then after recording the journal entries, the payment is processed by the treasury, and the cash will be then actually paid out to the vendor. So this is the general acquisition and payment process. So you find out that there are a number of functions, or in other organizations, they call it departments, which will deal with this process and this cycle from the actual department or business unit, which will be requesting the goods, the receiving of goods, the recording of the purchases, payment preparation, and then the actual payment. So this is the general process. So from the ordering of goods or service function, the key responsibilities or activities is to initiate orders so that the items or services required to maintain an optimum condition within the organizations are always available. For example, they will make sure that in the case of maybe a manufacturing company, they will make sure that the raw materials will not run out. Or maybe in the case of a retailer which is selling some goods or services, to make sure that the goods, they will always be available. So the function of this team will be to check the levels of their stock and make orders wherever necessary. The receiving of goods function is mainly focused on accepting and acknowledging deliveries from valid orders from the different suppliers, and also to record the delivery. Prior to the acceptance of this, they do physical checks on the quantity and quality and description of goods. Without the description of goods and the quality and quantity are checked to make sure that these goods are the exact goods which were ordered. The recording function will be responsible to raise the purchase and the corresponding liability in the accounting records. So this is mainly responsible for recording the transaction into the accounting journals of the company, so that they create the payable. The recording of all purchases and trade liabilities should be carried out by the recording function, so that controls are not bypassed. For example, by the raising of liabilities through the general journal by other departments. After the transaction is recorded, then it is passed through to the payment function. The role of this function is to ensure that the only valid creditors are paid, and that they are paid in the correct amount. They are also paid on time, and this function will produce the check requisition. So these check requisitions will be initiated, and the preparation of the check to be sent to the creditor. They can also initiate the cash requisition form, which will be used by the treasurer to make the payment to the creditor. So the final function is where the treasury will make the final payment to the creditor after the production of accurate and authorized check or cash requisition form. So this treasury will make sure that they pay the creditor accurately and timeously. So the purpose of all these functions and their responsibilities is to make sure that the auditor or the risk auditor is aware of the different stages and steps within the process, so that the auditor will be able to pick areas where there are some shortcomings. So as an auditor, you will be required to look into different documents which are being used in this process. And it is important to know and note the different functions of these documents, so that the auditor will be able to note if the due process was carried out in every process or every function within the cycle. So in the processing of the purchase order, there are two main documents which are being used: the purchase requisition and the purchase order. The receiving of goods and service function, they usually deal with two documents: the supplies delivery note and the goods received note. Then we have the recognizing of the liability function. This function deals with the vendor's invoice, the debit memo or debit note, the acquisition journal or acquisition listing, the accounts payable or trial balance, then the vendor statement. Then the final function, the processing and recording cash disbursement function, will deal with documents such as a check, the cash disbursement transaction file, and cash disbursement journal or cash disbursement listing. Now let's look into the documents in detail. The first document, the purchase requisition. A purchase requisition is a document that contains a list of requirements, and the key points to note about purchase requisitions is one, a purchase requisition is a request that is made to the purchasing organization to produce a certain list of material. It is an internal document. It remains within the organization. So mainly it is produced by a business unit or a department to the purchasing department, so that the purchasing department, they can buy those items requested on behalf of the business unit. So it remains an internal document within that organization. These purchase requisitions, they need approval from the purchasing organizations. So usually in many organizations, the requisition will be maybe made by a clerk, then maybe the manager or a supervisor in that business unit will authorize the requisition as a maker checker control to make sure that all the goods items which are being requested are authorized. So these are some of the aspects that the auditor will look into to check if these requisitions are approved from the purchasing unit or the purchasing organization. If a purchase requisition has already been approved, then it can be modified only to the limited extent. In some organizations, they have a control where they say if there are some errors within a purchase requisition, the whole document will be cancelled and a new requisition will be raised. This is done to reduce the risks of forgery and the like. So usually these documents, they are used without alterations, or maybe any alteration should be approved or maybe signed for by the senior managers. In terms of maybe if the department wants to buy something of a higher value, usually higher authorities or higher management, senior managers will be requested to approve those requisitions before any process. Let's say the department is requesting for an asset such as a motor vehicle. Usually, senior managers are required to approve such transactions. Purchase requisitions can be created for the following procurement types. So these are the different types where these purchase requisitions can be raised. A standard type may be where the purchasing organization will want to buy raw materials, or maybe it's stock for, in the case of maybe it's a retail organization, they want to buy more stock. In this case, they use purchase requisition. It can also be used in the case of subcontracting by providing raw materials to a vendor and getting finished material. They can also be used for consignment, which is for procuring material that is kept in the company's premises and paying to vendor for that. They can also be used for stock transfer, whereby maybe raw materials or some products are being transferred from one department to another, and finally can be used for external services, which is for getting services like maintenance for your plant and equipment from a third party or a vendor. So these are the different cases whereby the purchasing organization can issue the purchase requisition. Now let's go to the benefits of the purchase requisition. There are mainly two benefits of the purchase requisition within an organization. One, it can protect your business against the risk of fraud. All different types of fraud, which was highlighted in the case, the purchase requisition can deal with that. For example, where there's a maker-checker arrangement, whereby one will fill in the purchase requisition and a senior manager is required to approve or authorize that requisition. It means that the chances of fraud can be are kept minimum, unless in the case where maybe there are the risk of collusion, where two or more employees agree to defraud the company. So with those proper checks and balances, there's always a possibility that employees will misuse company funds if these checks are not in place, and they can even purchase some good items for their own personal use. So it is important to make sure that these checks and balances are in place. Another benefit for using the purchase requisition forms is it centralizes the whole procurement process. In an organization which is maybe so many departments, the purchasing function is centralized in one department, and all these departments will basically use this purchasing department in terms of every good items that they might require. They will just fill in the purchase requisition form, and the purchasing department will do that job for them. This is beneficial not only because it reduces delays in the procurement process, but also because it means that your business may be better able to leverage its buying power, whereby it will be able to negotiate favorable terms and conditions when dealing with different vendors. So the information on the purchase requisition form, this is important for the auditor to note the different information which is required on a basic or under normal circumstance on purchase requisition. The name of the department making the request, or the purchasing unit, the purchaser's location and mailing address, the amount of items, the description of the items, the name of the outside supplier if they are aware, or if they know specifically the supplier of that specific items. In some cases, the department may not be aware of the outside supplier, like who is the supplier, but the purchasing department should be aware of its different suppliers in regard to specific items. The expected price of purchase and a requested delivery date. So this is some of the information which is included in the purchase requisition, and I've also attached an example of the purchase requisition that in its simplest form that can be used by any organization in requesting for orders from the ordering department. So basically, this is the purchase requisition, and how can it benefit the organization, and also some sort of information and details that can be that the auditor need to take into account when assessing for risk. Before we move to the next document, do we have any questions? Any questions?
No questions.
Okay. So let's proceed to the next document. The next document is the purchase order. A purchase order is a commercial source document that is issued by a business purchasing department when placing an order with its vendors or suppliers. The document indicates the details on the items that are to be purchased, such as the type of goods, the quantity, the price. In simple terms, it is the contract drafted by the buyer when purchasing goods from the seller. So the difference between the purchase requisition and the purchase order, they may they serve the same purpose, but the difference is that the purchase requisition is mainly an internal document, while the purchase order is the external document whereby the purchasing department is requesting for a specific order from the supplier. The benefits when using the purchase order, it can help the company to avoid duplicate orders. When a company decides to scale the business, purchase orders can help keep track of what has been ordered and from whom. So the company will have a record of the different orders that it has made to its suppliers. Also, in the cases of maybe an order has been delayed, this will help the company to make follow-ups with the supplier, and also to check which order is processed and which order is still outstanding. Also, when a buyer orders similar products, matching the invoice can be difficult. The purchase order serves as a check for the invoice that need to be paid. So when reconciling the invoice and the purchase orders, and it will be easier for the accounts department to reconcile if there are different purchase orders. They can match a purchase order and an invoice. So it makes work easier. It helps the department to keep track of incoming orders. In addition, purchase orders also help keep track of incoming orders, and a well-organized purchase order system can help simplify the inventory and shipping process. So this it also helps in the shipping process. It will become simpler. It also serves as a legal document when between the supplier and the purchasing department. And it can also help avoid any future disputes regarding the transaction. So in the case that there's a dispute, the department can always refer to its records of purchase orders. And this can help to clarify any disputes that can arise. The information on a purchase order So the purchase order, it contains the issue date, the products needed, and the quantity of each product details, including the serial numbers, model numbers, and brand names, price of each product per unit, the delivery date, the purchase order number, the business information, including the shipping and the billing address, company name, and contact information, terms for payment, such as paid upon delivery, or maybe 7 days to pay, or if there are any options for payment dates or payments, payment types. So it is important for the auditor to verify if this important information are contained in the purchase order. For example, the purchase order number, usually this purchase order number should be sequential for so that it will be easier to reconcile and also to trace any document or any purchase. This number will be used as a central reference. Another document, which is a manual document, which is used in the process, is a goods received note. A goods received note is a record of goods received from suppliers, and the record is shown as a proof that ordered products has been received. The record is used by the buyer for comparing the number of goods ordered to the ones delivered. The goods received note is an internal document produced after inspecting the delivered goods received note. It's used by stores, procurement and finance to raise any issues and also to update stock records and then match against the original purchase order and the supplier invoice to allow payment to be made. So after the order is processed and the supplier actually delivers the goods to the purchasing unit, they will manually check for all the goods in terms of the number of goods ordered, the quality of goods, and if the goods are the actual goods ordered. So usually The supplier will send the goods in a Kanban of the delivery note, which is maybe after checking the goods and if the procurement officer is satisfied of the goods, they can sign a copy of this delivered note and return it back to the supplier. But in the process, they also fill in the goods received note. This goods received note is actually an internal document, which is initiated by the procurement office or the receiving officer after physically takes and identifies the goods delivered. The purpose or benefits of the goods delivery note is it validates the quality and quantity of the supplies. It is also used for quality controls and issue management, and also to validate invoice during the three-way matching, whereby the invoice are being reconciled with the goods received note and also the purchase order in the accounts department. It is also used for managing inventory and also for the actual updating of the goods into the stock record of the company. The information on this goods received note includes, but is not limited to, the name of supplier organization, the product details such as the name, the size, type, technical specifications, and so on, the delivery time and date, the quantity, name and signature of the supplier's representative, name of the receiving organization officer, name and signature of receiver, and the purchase order number. So this is important to quote the purchase order number on the goods received note for the purpose of a three-way matching or reconciliation with the purchase order and the supplier invoice. And I have also attached an example of the goods received note, which can be used in any organization. Any questions with regard to what we have discussed? Okay, so we move on to the next document, which is the vendor's invoice. A vendor invoice is a document listing the amount owed to the supplier by the recipient. When a customer orders goods and services on credit, the supplier prepares an invoice and issues it to the customer. This invoice contains not only a listing of the amounts owed, but also any sales taxes and freight charges, as well as the date by which payment should be made and where to send the payment. So the payment terms will be included in the vendor invoice. Upon receipt, the customer enters the invoice into the accounting software and schedule it for payment. No vendor invoice is issued if a customer pays cash. In the case a receipt is prepared for the customer or an invoice that is stamped paid. So if vendor invoices, they only they are only used or issued in the case of credit transactions. This vendor invoice will form part of the accounts payable record and subsequently updates the sub-ledger control account for vendors in the invoice that will follow through to the final payment. That will be, we will accordingly update the general ledger expense account.
Excuse me, is it the same as a purchase invoice?
Yeah, it's the same as the purchase invoice.
Okay.
Yeah. In this case, I just call it a vendor invoice because it is originated by the vendor or the supplier. So you can call it a supplier invoice, vendor invoice, or the purchase invoice. Right. So the vendor invoice contain mainly the amount owed, the delivery fee, tax applicable, accepted payment method, and the date of payment. And I've also attached an example of a vendor invoice. Another manual document that is used in this process or cycle is the debt memo or a debt note. This is a document released by the buyer for returning goods bought on credit, and debt notes are also called debt memos. In addition, it is used for various other purposes like rectification of a wrong invoice, change in order quantity, change in taxes, or etc. So basically, it's used to correct an invoice. It is used to correct an invoice. If there are any changes within the invoice, it will be corrected by the use of a debit memo or a debit note. This document is only valid upon acceptance, and these debit notes sent by buyers, they contain very important details. For example, the reason for the return, the quantity, the price, and the number of goods returned. Maybe the buyer finds out later that maybe the goods received contain some defects. They can return these goods to the supplier accompanied by a debit note. Alternatively, the seller also sent debt memos to buyers informing the buyer of pending debt obligations. So the debt memo is a two-way document which can be originated by the buyer or by the seller. So in the case of the buyer, they issue the debt memo to initiate purchase and return of goods procured on credit. These are the situations where these debt notes are being issued. When the goods delivered by the supplier are not up to the mark, which is maybe they are defective, they are damaged or inappropriate in size, shape, or in quantity, the buyer can return the goods and issue a debit note. When the supplier fails to deliver the goods or service on time, maybe there were some delays in the delivery of the goods, and maybe the buyer no longer has the use for the goods and there's need for return, the buyer can issue a debit note accompany the goods returned. They can also be issued when the goods or services are overbilled. Maybe there are some calculation errors within the invoice. The buyer can send the debit note to the supplier to correct that that error. Also, when a higher tax are applied on goods or services, maybe there was an error in terms of calculating the taxes. This can also be corrected by the debit note. If the buyer no longer wants to make the purchase, in this case, the buyer also issue credit note to correct that. In the case of the seller can also issue a debt memo under the following circumstance. One, when the seller requires adjustment in the invoice, any invoice adjustment, the seller will send the debit memo to the buyer to correct that. When the seller changes the billing amount, if there are some price changes, to correct that, the seller will issue a debit memo to the buyer. When the buyer increases the order quantity, and the seller needs to rectify that, they issue a debt memo to the buyer. And lastly, to remind the buyer of their current debt obligations. So the seller can send a debt memo as a reminder to the buyer of any debt obligations which are not yet settled. So usually the debit note, they includes, but not limited to, the following information: the company name, address, phone number, and the contact details, date of the debt memo, the order number for which it is issued. So it should be highlighted in the debt note that it is intending to correct which order number. So because it should apply to a specific order number or invoice number. Date of placing the order terms and conditions, customer ID as stated in the invoice, the buyer and contact details, the name of the contact person, invoice details in terms of the item names, the item description, reason for the debit order, the prices, the quantity, and the total amount. So when checking for risk, the auditor will look on all these issues to verify or to find if there are any modalities within the debit note, because it can be used for fraudulent purposes by either from the seller side or from the buyer side. for fraud purposes. So it is important to check for any risks within the debit memo. Another document, another manual document, is the acquisition journal or acquisition listing. It can also be referred to as a purchase journal. It is generated from the acquisition transaction file and typically includes the vendor name, date, amount, and account classification of or classifications for each transaction, such as repairs and maintenance, inventory, or utilities. It also identifies whether the acquisition was for cash or accounts payable. So it has the following columns: the date, which record the purchase date, the account credited, they cost the name of the business from which merchandise was purchased on account. Remember, we said there is a specific business unit or department will issue a purchase requisition. So after the goods or services are received, for accounting purposes, the purchase is credited on a specific account or on a specific merchandise. For example, if the HR department requested for stationery, they will send a purchase requisition to the buying function. So after the stationery is received, the accounts department will credit that amount to the HR department's account. So this is being done for accounting purposes. And another column is the invoice number, which records the invoice number for reference purposes. The posting reference records the account number after posting to the ledger, and the records and the amount, which records the invoice amount. So these are some of the information which are contained within the acquisition journal or the purchase journal. And this special purchase journal is used to make the actual account recordings for the transaction. So the purchase journal looks like the one which I attached on this document. For example, on this purchase journal, on January 2, invoice 105 is credited to S and Company for amount of 900. January 6, invoice number 240, which is credited on account A and Company for 3,200, and so on and so on. So this is this purchase journal will be used for the actual entering of the transaction into the company's accounting system. Another document is the accounts payable master file. This records acquisitions, cash disbursements, and acquisitions. returns and allowances transactions for each vendor. The master file is updated from the acquisition, returns and allowances, and cash disbursements computer transaction file. The total of the individual account balance in the master file equals the total balance of accounts payable in the general ledger. So this master file is used to create the general ledger. So it will be balanced to the general ledger, since the total of these individual accounts in the master file should equal the general ledger balances. Another document is the accounts payable trial balance. This includes the amount owed to each vendor for each invoice or voucher at a point in time. It is prepared directly from the accounts payable master file. So from the master file, the company can prepare the trial balance, which lists specifically the amount of the credit amount for each and every vendor. Usually, these documents, the trial balance, they are now electronic documents, but in some companies, the trial balance can be computed manually, and it is important to note that in most organizations, these accounts, payable trial balance, are now electronic documents. Another document is the vendor statement, which is a document prepared monthly by the vendor and indicates the beginning balance, the acquisitions, the returns and allowances, as indicated by the debit memos, payment to the vendor, and the ending balance. These balances and activities are the vendor's representation of the transaction for the period, not the client's. So periodically, usually on a monthly basis, the clients will send in the vendor statement, which indicates from the opening balance and all other transactions which took place within that period, and the closing balance for the period. This this statement is also used to reconcile the statement balance and the accounts payable balance. If there are any mismatches, then it can be verified using or other than documents and transactions which took place within the period, and the mismatch can be rectified. So in conclusion, it is important to know which documents are used in the different functions in the business cycle for you to be able to design internal controls appropriately. So it is very important to know which documents and what should be contained in those documents, so that proper controls are put in place, and also to note that various logs and various reports exist that could be produced for any of the functions, and at any stage in the acquisition and payment cycle. Besides these documents which we discussed, there can be some logs which are used. These logs can be form of registers also, which records mainly who does what, when, and why. And these logs are usually used for as a control function within the cycle or within the department. In addition to the above documents, the accounting records such as the creditor's ledger, the general ledger, and purchase returns and allowance journals are also used in the acquisition and payment cycle. And these records are normally maintained in the accounting department. So the accounting department is central in this process, since it records most of it records and store most of these documents. It is the keeper of the records for most companies. So this is with regard to the manual documents which are used in the acquisition and payment cycle. Any questions?
If I follow the rubric, there is also check requisitions and remittance advice also, and suppliers delivery note.
Yeah, of course. I think I did mention supplier delivery note in our discussion, where we were discussing about goods received note. I did mention something about the supplier delivery note, because usually the supplier they send the goods in a kanban of a supplier delivery note, which lists every item that is being supplied, and the receiving officer is supposed to sign a copy of the supplier delivery note and send it back to the supplier as a proof of receipt. And also checks which are used as a payment, check requisitions, cash requisitions note. These are some of the documents which are used within this cycle. Okay. Should we proceed to question 2, or we can continue on Thursday? Given our time.
Let's do question 2, then Thursday we'll do 3 and 4.
Sorry?
Let's do question 2, and Thursday we'll do 3 and 4.
Oh, okay. I will try to let's do question 2, but I will try to
Just try to summarize it.
Okay, I'll try to summarize it because I have another commitment. It's 9:30, so I'll try to summarize it, or maybe if my time is up, we'll end there. Then we'll continue from there on Thursday.
Okay, no problem.
Okay. The question 2, the case study mentions automation as a risk mitigation option. Using an appropriate diagram, propose how a manual ordering and receiving can be automated. So it is mentioned in the case study that automation is one of the risk mitigating option in terms of the different risks which are mentioned in the in the case study. Internal fraud, external fraud, conflict of interests, but what is the other risk which was mentioned? The errant payments and also missed payments or late payments. So the question is saying automation can be used to mitigate all these different types of risks in the process or in the cycle, and it requires us to propose on how a manual process can be automated. So on this question, we are going to focus on business automation. We want to know what is business automation and the basic automation, the basic types of automation, which are basic automation, the process automation, advanced automation, and intelligent automation. And also the automation process, where we'll look at the benefits of the business automation and the risk of running, ordering, and receiving manually. Then we are going to look in detail on the steps and what should be the different steps that are taken in the automation process of ordering and receiving cycle. What is business automation? Over the decades, automation has touched most every industry. So almost every organization in any industry, there is some sort of business automation. And in recent years, the coming on of artificial intelligence and machine learning, they are taking automation to another level. We now have what is called intelligent automation, which is changing the overall way in which a business is being done, in terms of increasing the efficiency and also in driving the revenue of different industries. The IBM Institute of Business Value estimates that automation supported by artificial intelligence will generate billions of dollars in labor value in 2002 alone. So this is operation or automation. And business automation is a term for the use of technology and IT applications that perform repetitive tasks or works, freeing up employees from higher value work. This includes business processes automation, robotic process automation, and artificial powered automation. in yesteryears, automation usually they used to require a massive computer packages, some big computers, mainframes, and the like. But today, with the coming up of the cloud-based automation platforms, it is much easier to automate any process within, and it is within reach of many companies, even the small companies, and it is also very affordable in terms of the price, because in previous years, some small companies were finding it difficult to acquire the needed technologies to automate their process. They could not, some could not afford the big servers and the like, but nowadays it is way much cheaper because of the cloud-based servers and the like. There are mainly 4 types of business automation. This includes the basic automation. By basic automation, this is automation where simple tasks are being automated using little or no IT codes. It's in basic automation tools. They just digitize the repetitive task, helping to eliminate errors and accelerate the pace of transactional work. Business process management and RPA are examples of basic automation. For example, where instead of writing an invoice on using pen and paper, nowadays invoices are just being generated by systems. So this will eliminate errors and also the risk of fraud and other risks. It also helps in making the work process quicker. There is process automation. In process automation, it manages business processes for uniformity and transparency. Often handled by dedicated software processes, automation can increase productivity and efficiency while also delivering valuable business insights. Process mining and workflows automation are examples of process automation. For example, in this question, where we are required to propose how the process can be automated. This is an example of process automation. There is what is called advanced automation. Advanced automation brings together humans and machines, integrate multiple systems across organizations, supporting more complex processes. Advanced automation relies on unstructured data, coupled with machine learning, natural language processing and analysis. It promotes knowledge management and decision support for specialized work. So it's more advanced than the process automation, and it includes a couple of things like machine learning and the big amount of data. There's also what is called the intelligent automation, which is driven by artificial intelligence. Intelligent automation means that machines can learn and make decisions based on situations they have encountered and analyzed. For example, in a customer service, visual assistants powered by artificial intelligence can reduce cost while enabling smarter interactions between customer and human agents. The result is a better customer service experience. So this is where the business, where business is going with the coming up of artificial intelligence. You will see that everything else is being automated. What are the benefits of business automation? One of the best ways to do this is through an automation platform that helps you follow. So to discover processes which pinpoints inefficiency or hotspots in operations to help determine where automated process can provide the greatest impact. This involves process mining and modeling. It also apply intelligence, use the data from automating your operations with machine learning and artificial intelligence to recommend actions and free up people for more strategic tasks. Augment your workforce to build RPA tools and deploy digital workers to collaborate with human whenever a higher level of productivity can be achieved or when backup is needed. And also to automate core operations where you apply core automation capabilities, document processing, workflow orchestration, decision management, and content service to key operational areas to meet different business needs. The business automation is well suited for streamlining processes across just about every area of an organization, which includes the marketing activities, the human resource activities, the sales processes, and the finance and accounting activities. So given that the process, the business process which we are required to propose an automation a process is under finance and accounting. So by automating financial planning and accounting functions, companies can free up time for important tasks like analysis, strategy, collaboration with stakeholders in accounts payable, for example, data capturing can be automated, invoices can be automated, and can be also meshed using systems, and approvals can be automated and can be routed to different employees. This will reduce data errors and help prevent fraud through background controls and also through logs. Because usually in an automated scenario, the system we will record the activity logs, who did what, when, and how. So all the activities will be recorded by the system, and this will help to minimize and manage business risk. And what are the risks of running and ordering and receiving the process manually? One of the risks is lack of visibility. There's high ordering processes cost. If a process is being done manually, there's a tendency of it will be costly in terms of time and also in terms of the monetary value. And also another risk is with regard to the processing errors. the use of manual paperwork will increase the errors rather than the automated process or system. And it is, last but not least, it will slower the process and the cycle in terms of if you are doing it manually and comparing it with doing the process using the system, it will be faster. Maybe instead of carrying the files manually to a supervisor or the manager for approval, the system will route the automated request to the appropriate manager for automated approval. This will be faster and unlike doing it manually. So what are the steps in the automation? So we are going to look in the general steps of automating a process. Then we are going to look in detail the specifics in automating the ordering and receiving process within the accounts department. So these are the general steps when automating any process. The first step is to establish ownership of the project. So there should be someone who is responsible of the project owner. So after establishing the project owner, there's need to secure buy-in from different departments, even the departments which are not affected directly by the automation process, but in an organization, it is important to find support from every department of the organization so that they are aware and they agree with the automation process. After securing buy-in, the next step will be gathering the requirements. What is required in the automation process, and then the next step will be mapping the process. On mapping the process, this is where actual automation will take place in terms of the specifics of the automation process. Then the last step is to train the staff, because after automating the process, the staff will need to be trained of the new system, or maybe the process, by automating the process, some stages of the process may be skipped, or maybe some new steps and stages will be added in the process. So it is important to make sure that every staff and every employee member is aware of the new process and what they are supposed to do, and their roles and responsibilities within the new process. So step one, identify a project owner, and the project champion is the first critical step towards successful ordering and receiving automation. While the project owner handles daily operations of the project, the project champion shares the vision of the automation with the stakeholders and gathers support. Both project leaders should be able to, one, effectively communicate with all involved departments, including IT. IT is one of the most important departments in the automation process because it is the one which host or which do the actual implementation of the process. In some cases, maybe, for instance, maybe the organization requires to subcontract or maybe to buy the system from an outsider. There is need for the IT department to be aware and maybe to make sure that the system can work with the internal system. So it is important for the IT department. It's central when we want to automate any process because the IT function will do the most of the work. And so these project leaders, they also need and should be able to understand the needs of end users who will be using the new system daily. So it is important to find out from the end users, the users of the systems, the employees, and understand their needs, their day-to-day tasks. So these leaders should understand that, and they also should be able to express the value of automation to different departments, employees, and stakeholders. They should explain and they should make sure that everyone understands why is it important for the process to be automated and how does it benefit the department in particular and the organization in general. They should also be able to identify early advocates of automation and enlist their help in gaining support. Because support is very important when we want to automate a business process. So this is the first step of and the second step is to secure buy-in. The project champion should obtain support from all involved departments, not just the ordering and receiving department, to realize the full-time and cost saving of automation. For example, the ordering and receiving can design a standard electronic purchase order to speed up the approval process. But if only a fraction of the department use this form, then the benefits will be minimal. So the project champion should demonstrate immediately to demonstrate the immediate value of the system and create project advocates along the way so that they gain buy-in from everyone within the organization, and the ordering and receiving automation project owner can achieve buy-in units by unit, moving from the ordering and receiving department to the departments with the most paper and therefore the biggest opportunity for improvement. So after gathering the buy-in from different departments, the third step is gather the requirements. Once the department leader are on board, the project owner should begin obtaining information about the ordering and receiving process from end users, stakeholders, and any other involved parties. In particular, identifying pain points helps the project owner separate the essential steps to the process from the non-essential ones. So the project owner should identify how employees are trained on the ordering and receiving process, how employees actually perform the ordering and receiving related tasks, the bottlenecks and redundancies in the ordering and receiving process. This is step 3. My time is not on my side. Do we have any questions for what we have discussed? I think we should continue from step 4 and step 5 on Thursday, because step 4 it contains in detail the specific steps in the actual process of automation, what needs to be done and how. So we are going to look on that on Thursday. In the meantime, I would like to take questions for what we have discussed so far.
Yes, in a question, it is using an appropriate diagram. Will you provide us with an example?
Yeah. I'll provide diagrams in step 4. Yeah, we will have a number of diagrams in step 4 to
Okay.
help to describe how the process can be done within the ordering and receiving cycle. Any other question?
I don't have any question. I'm super up to so far.
Okay, thank you.
Okay, thank you. And
Okay,
welcome
guys.
back.
Welcome.
Okay, thank you.
Thank you so much. Enjoy the rest of the evening.
Thank
Good
you.
night.
Same to you.
Good
Bye-bye.
night. It's only that I have some other commitments that I need to attend in a short time. So we'll join again on Thursday. Thank you so much.
Okay, bye-bye.
Bye.
Okay, bye.